Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. I'm starting off analyzing the volatility index, ticker symbol VIX, because this is the leading indicator that I talk about each and every week, and I think it is extremely important that investors follow along with this and at least learn how to use it, even if you've never looked at it before in your life. The volatility index is inversely related to the S&P 500. So if you look at the lines that I drew last week on the chart from last week's market report, you'll see this was my forecast line that I drew in a downward direction. Last Friday, we came right up, hit this resistance line right here, and then pulled back in the same day. So we rallied up and stormed down with extreme price movement on the VIX. And so when last Friday's report came out, I said that we would most likely pull back from that resistance and move back towards this 20-period moving average. So the end of the line, as I drew it last week, the end of the line was my target. And you can see that yesterday we came right to that target and even moved a little bit lower. So what does this mean for next week? Well, I'm going to erase last week's forecast line, and I'm going to draw a new line. These long candles, these long red candles, are showing momentum. And we will not see a break in that momentum until these candles get a little bit smaller, like we see back here, and you see these small spinning tops back here. So the momentum is in force, and so I think that the VIX is going to move a little bit lower to test this support level, which happens to be the all-time low for the VIX. And then once we hit that support level, I think we're going to move up. There's a couple of reasons why I think we're going to move up. Number one, there's a wide divergence from this 20-period moving average. It's that blue line right there. We call that the rubber band effect. And there's a gap above the market. You see here Friday on December 8th, we gapped down on the VIX. And if you've been following along with the market guys, you'll know that I've said it quite often that the VIX gaps fill 100% of the time. So eventually this gap will fill and the price will be brought back up towards that gap. So if the volatility index is expected to rally again towards the end of next week, what does that mean for the S&P? Well, if they're inversely related, it means that the S&P could very well rally earlier in the week and then pull back. You can see here from my forecast lines, again, these were drawn last week. The market rallied exactly like I said it would on the spiders. We didn't quite hit that target, but I'm going to leave that there as a secondary target. I think we'll eventually hit that next week and then even see a test of this resistance point. Once the resistance line is hit, I think we will see a pullback on the S&P towards the end of next week. See, the volume is holding steady. It's not dropping, so that's telling us the buyers are still in force there, hence the reason why I think we'll continue that rally Monday and Tuesday. Now, if we look at a more broad-based index, which is the Russell 2000, you'll see again my lines are in place from last week's report. I said that we would bounce off of this 20-period moving average and rally. We did just that. Last Friday we bounced actually, and on Monday right here, we hit my price target right there. So I'm going to leave this in place because I think that the Russell 2000 will continue on this short-term trend line that I have here. Again, testing this resistance just like what we saw in the S&P and then eventually pulling back. So I'm even going to extend this just a little bit more, just like that. I think we'll go a little bit higher in the Russell and then pull back towards the 20-period moving average. Now, if you look at the Qs, this is ticker symbol QQQ, this is the Nasdaq market. You can see that the Nasdaq rallied perfectly in what I thought would happen. We didn't quite hit the target yet, but I'm going to leave that in place just like I did with the Russell 2000. I'm going to draw this as resistance once again, just like the other markets. And I think that the Qs are going to start to pull back as well as we progress into next week. One thing you have to keep in mind is that In January and February, we're expecting the tech stocks to rally as part of what's called the January effect. The January effect is when the fund managers start to sell out of large cap stocks and they buy into the smaller cap stocks, and that creates supply and demand moves within both of those markets. And I'll get to that a little bit when I analyze the diamonds. But this is going to be my forecast for the Qs next week. Pay attention, stay close to the market, guys, and we'll see how it all pans out next Friday as we review what we're doing here today. Now again, the diamonds, DIA. Last week I spent so much time talking about the VIX and the Russell 2000 because those are more broad-based indices that I did not talk about the diamonds. I'm going to do that today. The January effect rally happens obviously in January, lasts through February. But the diamonds have their own cycle, and that's called the Santa Claus rally. Some call it the year-end rally. We see this over and over again where the large cap stocks are bought up by the money managers, the fund managers, the hedge fund managers. And so I think the diamonds are going to continue on this upward move right here and test the high resistance point right there. So I'm going to leave this in place. I don't think we're going to storm up, but I think we're going to continue up, maybe even setting a new high in the diamonds. We'll have to see. And so I'm not going to put a pullback point on that one because we'll have to wait right up until the end of the year to see if there's a slowdown in the buy action on the diamonds. Now, on December 18th, I'm having an open house Q&A session. This is open to the public. It's free. If you go to our Market Guys website, themarketguys.com, and scroll down, you'll see there's a link for that registration right there. Click on the link. It'll bring you to the registration page where you can fill in some information. Click register, and then your seat is saved. Come with questions. Come with stock symbols. I'll analyze those stock symbols. And I'm really trying to have a special guest on the 18th. I'm not going to confirm that yet until I hear back from him. But if he could make it, you're going to be in for a very big surprise as we analyze the gold markets, which we haven't done in a very long time. So have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.